Hi everyone. Did you get a chance to see the budget today? So the announcement started around 12:30 and the Chancellor's speech was actually nearly an hour long. So there was an awful lot of content in today's announcement. And given that we weren't even supposed to have a spring budget, there's a lot going on. So what I thought I'd do is I'd just pick out those points that are, I think, relevant for fellow property investors. And as many of us in the property industry these days also have limited companies, to also highlight some of those points that were raised today that impact small businesses. So the first key point and the headline point is that furlough is extended until the end of September. So this is particularly relevant if you have tenants who are still on furlough. The support will be extended until September, and hopefully by then we should be out of lockdown restrictions by then. So in terms of your tenants being able to pay the rent, they still have a guaranteed income at least until that time of the year. Self-employed grants have also been extended, so there are 2 more grants due to be paid between now and again the end of September. So again, if you yourself are self-employed or you have tenants who are self-employed, there is still some financial support there as well. The universal credit uplift of £20 a week, which was announced last year during the first lockdown, will be extended for the period up until September. However, this will be made in a one-off payment of £500 rather than in weekly instalments to those people that it impacts. Again, if you have tenants on universal credit, many of my tenants have been claiming for universal credit as a result of losing their job or losing their income during this period. So again, hopefully that should help with the financial stability of your tenant base. The Chancellor did just mention a reminder of the Restart and Kickstarter schemes. So these are to help unemployed and young people into employment. So again, from a property investor perspective, this is good news in terms of getting people into employment and therefore these people becoming viable tenants for our properties. The incentives to take on an apprentice have also been increased, so you now get a payment of around £3,000 for any new apprentice, and an apprentice can be any age these days. There's no age restriction on it anymore, so if somebody is looking for a career change later in life, potentially as a result of losing their job during the crisis, then this might be a good opportunity. Again, if you yourself are a business, a small business, and you're looking to grow, this might be a really good way to add to your staff to help your own business expansion. Grants have been offered to retail and hospitality businesses once they start to reopen, and also the culture, arts and sports sectors were mentioned as well. So if you have commercial tenants, then hopefully there will be some help coming along for these businesses as well. There is a new business loan scheme, so the bounce back loan and Sybil scheme from last year basically are now closed, but there is a new loan scheme to replace it. Businesses of any size can apply and can apply for loans of between £25,000 to £10 million. And interestingly, the government is guaranteeing 80% of that loan. So hopefully lenders will be encouraged to enter the market and make these loans available. There's a business rates holiday that was offered to many small businesses last year, so they didn't have to pay business rates at all. That 100% business rates holiday has been extended for another 3 months. Then business rates will be discounted by another 2/3 for the remaining 9 months of the financial year. For those operating in hospitality, particularly serviced accommodation, you'll know that the VAT rate was reduced to 5% last year. This reduced 5% rate will stay until September of this year, and then it will rise to an interim rate of 12.5% for another 6 months before it returns to the standard rate by April of next year. So that's good news for those in serviced accommodation. Perhaps another big ticket item that will be all over the news is a stamp duty holiday has been extended until the end of June. So there was concern about a cliff edge effect of the stamp duty holiday ending at the end of this month. Instead, the stamp duty holiday, so purchases up to £500,000 will be in the nil rate band. Now do note this is only for residential properties, so the 3% buy-to-let surcharge on stamp duty is still there. Nonetheless, even if you're buying buy-to-let, then the nil rate on the residential aspect of stamp duty is still really beneficial. To prevent, in order to prevent another cliff edge at the end of June, it'll actually then go to a transitional rate. So the nil rate band will then go to £250,000 before it returns to the pre-COVID level of £150,000 from the 1st of October. Now, if you are hoping that there would be a dip or even a crash in the housing market, then I think the stamp duty holiday extension has put paid to that. And also put paid to that is these new 95% mortgages where the government is standing as guarantor for these mortgages. The main lenders of Lloyds, NatWest, Santander, Barclays and HSBC are already on board, and discussions are continuing with Virgin Money and Nationwide for them to join as well. So what this means is that people looking for a residential property, so these mortgages are only available in the residential market, not the buy-to-let market, they're available for first-time buyers, but they're also available for home movers as well. So if you are looking to move home, then you can be eligible for these mortgages as well. Now, for those of us in property that are planning for long term and maybe in property for future generations, you'll want to take note that there's no changes to the inheritance tax thresholds. There's no change to the pension lifetime allowance and the annual exempt amount on capital gains tax. These are all being held at their current rates until April 2026. For those of you looking to continue to invest in property, then the announcement of the free ports throughout England, as well as new town funding, will be of interest to you as well. I'm sure there'll be more information to follow. More detail will be available on the government website, but if you are looking for new areas or new investment opportunities, then it's certainly worth looking in these areas. The Chancellor also mentioned several government departments moving to various different areas of England as well. So again, this will be attracting more investment and more people to those areas, which will improve the housing market. Another headline grabbing announcement today is that corporation tax will increase to 25% from 2023. So if you're a small business, this might be of concern. However, what was announced today is a new small profits rate corporation tax for small businesses. So for businesses that have profits of £50,000 or less, then the corporation tax will be maintained at 19%. So effectively, this increase in corporation tax is really only aimed at companies that have stated profits of more than £250,000. And finally, the Chancellor announced the new super deduction tax rate. This is to encourage new investment into the economy. And effectively what this means is that you get 130% tax rebate on any investment. And the example the Chancellor gave was an investment of £10 million will attract a £13 million tax rebate. So this is quite a significant change to investment taxation, and this will be available for the next 2 years. Now, as I say, I've really only briefly touched on those aspects that impact the housing market, therefore property investors, and also those related to small businesses and limited companies, as I know many fellow property investors are operating under limited businesses at this time. So I hope you found this summary useful.